Hi everyone, I'm Akhilesh Thakur. Today I'm going to talk about financial accounting concepts. So these are the table of content. So today our objective is to understand some major accounting concepts and learn about the trial balance and its purpose and see how a balance sheet is derived from the trial balance. So major concept from chapter 1 is first, the purpose of accounting is to identify, record, and communicate financial information. So it's like a language of business that helps everyone understand how a business is doing financially. And the accounting equation goes like, as you can see in the screen, assets is equals to liabilities plus equity. So these equations simply shows that what a business owns, which is assets, and it's financed either by borrowing, that is liabilities, or through owner investments, which is equity. There are some key financial statements as well, such as the income statements that shows revenues and expenses to calculate net income. Another is the balance sheet, which provides snapshots of a company's outflows. Um, Moving on to next, the statement of cash flows, which shows cash inflows and outflows. And the last one is the statement of retained earning that shows the changes in retained earnings over time. So major concepts from chapter 2 is first of all, there's a double entry accounting system. So basically it is a system that ensures every transaction affects at least two accounts. For every debit there must be an equal credit. So this keeps our accounting records balanced and accurate. And accounts and ledgers are used to classify and summarize transactions. Think of accounts as different categories like cash or revenue, and the ledger as the book that contains all these categories. And journals and posting. So we first record transaction in a journal, which is like a diary for all financial transaction. Then we post this transaction from the journal to the ledger accounts. So, what is trial balance? So simply, trial balance is a list of all accounts from the ledger along with their respective debit or credit balances at a specific time. And its main purpose is to check the accuracy of our bookkeeping. If the total debit equal the total credit, it means our records are correct and balanced. So this is a very crucial step before preparing the financial statement. So here I have used the trial balance sheet of the Phoenix Foundation. So as you can see in the sheet, the company investment 14,000 in cash to start the business, and the company bought office equipment worth 3,000 on credit, and, and the business provided consulting services and earned 5,000 in cash, and the business paid 1,000 for rent. So total from this transaction, we prepare the trial balance listing all accounts and their balances. As you can see, the total debits are equal to the total credits, both accounting to 18,000. This balance tells us that the accounts are accurate. So the balance sheet shows snapshots of company's financial position at a particular point in time. And the component of a balance sheet is divided into three parts. that are assets, for example, cash or equipment, liabilities, for example, accounts payable, equity, let's say, owner's equity, and retained earnings. So we take the numbers from the trial balance and organize them into three categories to create the balance sheet. So here is an example of a balance sheet of the Phoenix Foundation again. Uh, here you can see the assets total is 17,000. Um, uh, Gas is 14,000 and office equipment is 3,000 equals to 17,000, and in liabilities the account payable is 3,000, and so total liabilities become 3,000. Equity, the owner's equity is 10,000 and retained earning is 4,000, is equal to 4,000. So the total liabilities and equity is 17,000. So the balance sheet clearly shows that the assets are financed by a combination of liabilities and equity, keeping our accounting equation in balance. So in conclusion, understanding these basic accounting concepts is essential for everyone involved in business. The double entry systems ensures accuracy. The trial balance helps verify that accuracy, and the balance sheet provides a clear picture of a company's financial position. So this knowledge helps in making informed decisions, which is critical for the success of any business. So here are my references I used for this slide. Thank you very much.